and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I will give an update to my portfolio, and then we're going to talk about delisting, since one of the companies in my portfolio has been delisted as well. So let's start with a quick portfolio update. The first thing we immediately notice is that there was a green circle for this week's episode, meaning that the portfolio is up in value compared to last week. The next thing you see is that the cost has changed as well. So if we go to the portfolio values tab here, then you can see that the cost of the portfolio has increased with a little less than $4,000, and at the same time that the value of the portfolio has increased with a little more than $4,000. So let's take a closer look at what has actually happened underneath these numbers. So if we start by going to the history tab, then we can see that South Jersey Industry is no longer a holding in my portfolio, since I bought them back in April 2021, and not too long after it was announced that they were going to be taken private, meaning that they were going to be bought at a premium and getting delisted from the stock market. So this is actually one of the times where I would say I was pretty lucky, since when you look at the gains that I have had here, I have actually made a little more than 50% on this company. I had no way of knowing that they were going to be delisted and at what price. So my 200 shares was being bought off from the stock market at $36 per share, giving me this nice return of a little more than 50% for a holding period of 1 year and 10 months. And the same thing actually happened to Store Capital within this week. So if you haven't sold your shares in Store Capital, then they have been sold this week as well, since they have actually also been delisted. The difference here is I decided to sell immediately when that news was out, since I believed that I would be able to get a better return than 0% over a period of 4 months. So depending on what kind of philosophy you have, or if you are actually just sitting and checking your positions on the particular day, then sometimes it makes sense to keep a share which is going to be delisted, and sometimes it makes sense to actually keep it until it becomes delisted. Usually the share price increased to around the level where it's going to be delisted at, if the market assumes that it is going to happen with a high degree of certainty. So this covers the first part of why the cost of my portfolio has changed. But naturally, since I have now freed up some capital, I must have invested in something as well. And if you go back to the overview arc here and scroll to the top, then you can see that my position in Citigroup has significantly increased, since prior to this week I only had 100 shares and I was down more than 25%. So I have decided to invest more specifically 220 shares, which I bought for a little less than $50 per share, meaning that I bought for a little less than $11,000. And by that, I have lowered my cost basis. So now instead of being down 25%, I'm only down a little more than 8.5%. But perhaps more importantly for this portfolio, if we scroll to the side here so we can see the dividend yield, I have also increased my average dividend yield, since my original purchase had a dividend yield of 3.09%. I have now increased that to 3.02%, since I have bought at a lower cost. And the purchase here actually had a yield of just slightly above 4%, meaning that I have added around $110 in additional dividend income every single quarter. So one of the reasons why I really love dividend growth investing is when I'm making a purchase like this, I think in terms of my goals. Since I have a goal of achieving $4,000 in dividends per month, which is the equivalent of $48,000 per year. If I divide that with all the days in the year, 365, that means a little more than $131 per day. So when I'm making a purchase like this, now I'm actually capable of sustaining myself for 3 additional days per year in eternity, if this company can continue to grow its dividend with the inflation. I know this sounds extremely simple and very basic that I have a thought like this, but I mean, the best holding period is forever. Of course, I know in reality, it is very unlikely that nothing significantly will happen to Citigroup while I'm having this holding. But I mean, as long as they're not cutting the dividend, or that I'm losing faith in the company, or they become significantly overvalued, I will simply just hold on to my shares. Speaking of dividends, naturally we have to go to my favorites tab, namely the dividends tab. And if we scroll to the side here, now you can see that I have finalized 2022. Apparently I jinxed it when I put in all the dividends which I was supposed to receive, since it took roughly a month before I actually got my dividends from Brookfield Asset Management. But finally they are there. At the same time, if we look at January, since that has now been finalized, we can see that I received a little more than $250, which is quite good. But if we compare with January 2022, you can see that it's actually down $200. This is again due to the fact that Store Capital was delisted and I decided to sell out of them. So naturally, when your biggest dividend contributor is no longer in your portfolio, it has a significant effect on my dividends. But luckily for me, when I'm looking at February here, I'm already off to a good start, since I've received a little more than $200 already. This was a quick update to my portfolio, but if we for a second go back to the portfolio values tab, since I was extremely proud in 2022 that I significantly outperformed the S&P 500, how does it look today? Well, as usual, I take the value of the portfolio minus the cost for the end of the year, which is $42,000. Then I take the value of the portfolio today minus the cost today, which is $46,000, meaning that I have had a gain this year of a little more than $3,700, which is a little more than 1.6% in return. I mean, for a 6-week period, if I can continue to do that, I would be extremely proud. The only downside with this is when I'm comparing this to the S&P 500, that is actually up close to 7% year to date, meaning for 2023, I am significantly lacking the S&P 500. Instead of picking individual shares, I would have been much better off if I have just bought a passive index fund. Of course, I know a 6-week period doesn't say a lot, and people will continue to compare you on various different time scales. So it's just to show the integrity here of my channel that I'm not trying to hide anything. I will continue to show my performance no matter if I'm beating the market or if the market is significantly outperforming my portfolio. So that actually sums it up for yet another exciting week of the Lazy Money Game. So if you have made it all the way to the end of the video and have enjoyed the content, then please consider leaving a like or subscribing to the channel. It really helps me out a lot. And until I see you next time, bye!